Howdy there, folks. Welcome into this four videos up here for me to react to in this one here today. First one up here, Day and Ives, Magnificent 7 will lead tech higher. I want to react to that one, kind of give my opinion perspectives on that one. Then we're going to speak about this one, Tesla to raise pay of hourly Nevada Gigafactory workers. I thought it was important I cover this and explain what Tesla's going to likely do to pricing of their vehicles in 2024. It's very important everybody understands kind of what's going on there and why certain things are happening. Next one up there, we'll react to this one, holiday spending on the rise despite weak consumer sentiment. That should be an interesting one. New data out here today in regards to that. And then last one up here, Amazon could shake up regional sports network costs. I thought this would be an interesting one to watch for two reasons. One is if you own Amazon stock like I do. Two is if you own Fubo stock like I do, right? I thought this would be a very interesting one because that has ramifications for both those stocks in this one. Appreciate everybody joining me as always. Thanks so much for being here, folks. 37,100 plus subscribers on the channel now at this point in time. I record you guys an entire workshop this weekend, about a 45-minute video that goes on exactly how I plan to invest in 2024. Everybody's talking about, recession, no recession, soft landing, hard landing, rates going up, rates going down. So I said, okay, with all this confusion, let me just give an entire game plan on exactly how I'm investing in 2024. So if you want free access to that, pinned comment down there, and I can email it over to you maybe tomorrow or something like that. Alrighty, guys, so let's get into this.
9, as ever, looking quite dapper. I don't think any of our audience will be surprised to hear that you're bullish going into 2024. And that a lot of it, what undergirds your thesis is the growth of AI. Why and what gives you the confidence that you'll be right?
I think it's really the use cases. I mean, use cases, that's the yellow brick road. You follow the use cases, that's where the growth's exploding. And I think when I look at enterprise software, when I look at some of really the transformative names, what's happened with Microsoft, what's happened in Alphabet, of course, godfather of AI, NVIDIA, and then you look at some of the pure plays, Palantir, MongoDB. I think the difference now is that it's going to spread to the rest of tech in 2024. I believe this new tech bull market has already begun.
Right. I mean, you've talked about this in the past being a moment similar to 1995, essentially the advent of the internet. When you talk about a spread, though, and you see the benefits going to so many companies, and that will be reflected more broadly in their stock prices as well, beyond sort of some of the names we're looking at and other beneficiaries so far this year?
Yeah, I think the difference is that when I look at street numbers for 2024 across tech, specifically when I look at software, even big tech, I think potentially underestimated by 5, 7, 10%. So when you look over the next few years, even some of the bears now, they're coming out of their caves out of hibernation mode, starting to maybe reevaluate some of these names in terms of what the growth could look like. And that's why I think Magnificent 7, I believe...
All right, hold your horses for just a moment, okay? Listen, I love tech stocks as much as anybody, but we have to be honest about this. We have to be honest. These companies, at the end of the day, are beneficiaries of the economy doing better or worse, okay? So if you're confident the underlying economy is going to get better over the next couple of years, and sure, tech stocks can continue to roll, their revenues can continue to come in, but let's never forget how these companies make all their money. It's based upon how the economy is doing. Look at, consumer sentiment over the last year and a half, and look at Apple's numbers. Their revenue's literally been going down. Apple's revenue's down, right? NVIDIA is a byproduct of companies feeling more confident about their future, so they're going to spend and they're going to buy a lot of NVIDIA-related chips, right? If that changes over the next year or two, for the worse, obviously it would negatively affect their business. Meta stock, this is my biggest position in the public account. Meta, 100% dependent upon companies, small businesses, mid-sized businesses, and large corporations advertising. And they're only going to advertise when they feel better, right? And look what happened to their revenue numbers when suddenly people didn't want to advertise as much, right? Amazon, people ordering off the website, and on top of that, AWS, right? And look at how slow the growth has been in AWS over the past 3 quarters. And the reason it was so slow is because a lot of companies pulled back. They got uncertain with the stock market. So I just think that's always an important thing to remember. These companies don't just do great no matter what. They do great based upon the economy. If the economy slows majorly, if companies stop spending as much, it really significantly hits their numbers as well.
30% over the next year. But I think in terms of overall tech, we see a year from now, I think tech's up another 25% because of this transformational AI revolution that's now here.
I'm curious, you say Apple, which also is you're positive on and believe will have a good year next year. You see it introducing the AI App Store. There are a number of, I think, investors who are like, where is Apple on AI? You know, it's not a name that comes up that often. And do they have a strategy? Is it going to be effective and robust?
And I think, look, Cook plays chess, others play checkers. And I think this is another example. They've been late, but within those walls of Apple Park, I think what they're really focused on is developing a separate app store that's going to be AI apps within Apple's ecosystem. And from a monetization perspective, I think that could be an incremental $5-6 billion per year. I think that's something that gets talked about at WWDC. It's one of our predictions in 2024. And I think this is going to be another part of that re-rating. I think we sit here a year from now, the first $4 trillion company we believe will happen in 2024 being Apple, followed by Redmond and Nadella, in terms of what we see with Microsoft.
The good part for us is, Dan, that while we have to keep it short today, we get to have you back soon. And we will a year from now to see whether you were right.
No, thanks for having me. And I think, again, the new bull market's here. We think it's get out the popcorn moment for tech.
Get out the popcorn. So we just sit back and watch.
I think as numbers go higher, the bears come out of hibernation mode, soft landing takes place, and this AI 1995 moment happens. I think that's why it's really the perfect storm for a bull market in tech.
All right. Dan Ives, thank you.
Thank you.
Okay, so am I bullish on tech for 2024? And the answer to that is slightly, but not that bullish. And the reason being is, and I think some of these stocks will go up. I wouldn't be surprised at all if Meta has a good year, if Amazon has a good year, a few others. We'll see about Tesla. A lot of that's going to depend on what happens here with interest rates. But with that being said, I'm not nearly as bullish going into 2024 with tech stocks as I was going into 2023, right? The valuations are obviously massively different. The stock prices are massively different, right? And so, everything that I thought would play out this year has played out. And so that's great, but that matters for this year. So for 2024, I think it could be a decent year, but I'm not expecting some sort of booming year for tech in general, okay? Tesla to raise pay of hourly Nevada Gigafactory workers in January. We're going to talk about why this matters so substantially here in just a moment.
Battery factory in Sparks, Nevada, that some hourly workers will see pay increases of around 10% starting in January. CNBC viewed internal materials that said workers had been informed of cost of living adjustments. Those pay increases may help Tesla stave off workers' interest in forming a union and pushing for collective bargaining in Nevada. Tesla shares, if you've been keeping track, they're sitting right at around $253 right now.
So Tesla, obviously raising employee wages. So as Becky Quick spoke about there, right, Tesla's going to have to continue to be, at least in the short term, and when I say short term, I mean over the next year or two, pretty aggressive with raising wages. And the reason being is United Auto Workers Union wants to make a move there. They really do. They want to try to unionize Tesla, right? And obviously, Tesla doesn't want to be unionized for many various factors. And so at the end of the day, what does this mean for Tesla pricing of their vehicles likely in 2024? Okay, so what this means is likely Tesla will go up on prices in 2024 on pretty much their entire lineup. Do not be surprised, and do not be surprised if it's more than just one price raise throughout the year. It could be several price raises. That's why I say, if somebody wants to get a Model 3, a Model Y, right now is the ideal time, because I have a pretty strong opinion that if anything, they're going to start going up on price. And if we look at the Model 3 price and Model Y price a year from now, I wouldn't be surprised at all if it's several $1,000s more expensive for you to buy it at this time next year versus buying it right now. And I'm talking several $1,000s difference, okay? So, the days of Tesla just keeping dropping price, that's over, in my opinion. We'll see what, Elon Musk can make whatever decisions he wants to make, but I just don't foresee a situation where he continues to drop price. I think the next moves will be higher, if anything, and I wouldn't be surprised if they move several times higher throughout the year in 2024, okay? Alrighty, next one up here. Holiday spending on the rise despite weak consumer sentiment survey finds. Alrighty.
Over the economy and other issues, they do plan to spend heartily this Christmas season. Steve Leisman joins us right now with the results of the latest All-America Economic Survey. And Steve, they are running out of days to do it.
Yeah, it's time to shop. That's right, Becky. But the CNBC All-America Economic Survey pointing to a green and a blue Christmas spending season. Green because Americans say they're going to spend more. Blue because they are decidedly downbeat on the economy. Take a look at our data here. 18% say they're going to spend more. That's up from 11% last year. 3%.
Yeah, 18% say they're going to spend more this year. Well, shoot, with inflation, I'm sure you should spend more, right? 43% say about the same, and 37% say spending less. So basically what that smells like is the consumer's in a better spot right now than they were at this point last year. Which kind of goes into my whole theory about next year, which is the consumer is going to be in a far better place in 2024 than they've been in 2023, right?
They're going to spend about the same, and you call it 4% fewer say they're going to be spending less. That's good news. We see average spend up double digits, driven both by inflation and by people being paid more, but it contrasts with our sentiment data, which improves slightly, but it remains depressed. Those who are optimistic now and for the future,
sentiment will come through in 2024. It will pick up in 2024. I'm very confident of that. Is it going to reach all-time highs? No. But is sentiment going to come back quite substantially in 2024? Absolutely. Now, so optimistic versus pessimistic. So optimistic, geez, the number's so low for optimistic. That's insane. That's insane how low optimistic, right? And then pessimistic right there. Wow. That's intriguing, right? Wow.
15% now, and for the year, now, by the way, this is up a little bit on the quarter, but this is the year for the average, 66% being pessimistic now and for the future is a record high in the 17 years we've been doing this. So we've never found people more depressed and never found them spending more. This data continues this conflict we've seen between lousy sentiment data but robust spending data. We have low unemployment rate. We had strong GDP growth in the third quarter. And the November retail sales were pretty good. Okay, let's look at who is spending more. Young versus old spending more. Democrats versus Republicans, they're more upbeat on the economy. And African-American adults versus white adults spending more. Why are they spending more? 32% say it's because they're being paid more. Now, 24% say it's because things cost more. And then there are those who say they have more people to buy for. What about those spending less? Well, that's where the inflation number comes in. Spending less because things cost too much, not liking the economy, and those, of course, some being paid less. As you would imagine, the poor sentiment data showing up in even worse numbers than we've registered in the past for President Biden. We're going to have that report on the 10 a.m. hour, or you can read it all right now, guys, online at CNBC.com. Becky?
Steve, the spending, everybody keeps, this has been like waiting for Godot. Everything we say, okay, consumers are spending now, but they're not going to spend later. I feel like that has been a broken record we've been listening to.
Yeah, it's interesting. I mean, a lot can be driven by whoever's in office in terms of people feeling like, good about things, right? And for Republicans especially, they feel a lot better if a Republican's in office, right, than a Democrat. And so that makes them feel better about the economy. Democrats, on the other hand, they don't pay as much attention, and I'm talking as a whole, right, don't pay as much attention to the economy, but they're much more likely to feel bad about the way the country's being run and social related things and things like that, right? And if you were to do sentiment surveys about like how Dems feel when a Republican's in office, like when T-Man was in office, it was insanely low in terms of his approval when it came to that. But Republicans felt great about the economy. So both sides kind of look at things a little bit different, but a lot of that runs sentiment depending upon who the president of the United States is. It's a little crazy, but that's the way it is, man. If somebody's guy's in office, they love it. And if their guy's not in office, they're like,
The last couple of years.
Yeah, it's true. People have been sort of forecasting the demise of the consumer for a very long time.
That's why I don't vote for I never vote, because I get to be happy all the time. Instead, all these other people are depressed for 4-8 years. I'm like, I'm not going through y'all's depression, okay? I'm literally just going to be happy all the time. You guys can play that game. Oh, my guy's not in office. This sucks. Everything's bad. You guys can play that game. I'll play the game of be happy all the time.
I think I've told you my theory on this is that all the economists and the forecasters and the analysts, they put a lot of weight on the money that consumers got from the government. And I think they put less weight on the idea that both many Americans are employed with that low unemployment rate, and that wages, to an extent, especially on the low and the moderate end, have come up, Becky, recently, just in time for the holiday season. We now have real or inflation-adjusted positive income growth, and that, I think, has to help. The other thing you find, Becky, I think...
They're starting to talk about it. Wow.
You're out there shopping, you're wondering, well, how do things look for me next year? People are relatively confident in their jobs. We have other surveys showing good confidence that people are not going to lose their jobs, Becky.
What did I tell you guys? I said, you watch. Everybody's going to start talking about what I've been talking about the last several months, which is so important. And believe me, 3 months from now, 6 months from now, everybody's going to be talking about this. Real wages taking up. Everybody's going to be talking about that. And that's something we're going to see play out in 2024. Real wages improve at the most impressive clip, in my opinion, that we've seen in a long, long time. Because inflationary numbers will be so low for most of 2024, and because wage increases are still there. So, anyways, next one up here. This is going to be an interesting one. I'm actually looking really forward to this one. You can tell this is one of those that a lot of people don't care about, 738 views. But if you own Amazon or Fubo, I think you should care about this substantially, or even Diz, to be honest, that as well.
On deciding they're going to, throw up a Thursday night football game a couple times a year. This is like them fully becoming an ESPN competitor, I think.
Well, Brian, it could be a very big deal, but remember, this is in bankruptcy court, and bankruptcy court is a very unpredictable forum. It's very different than most court proceedings. It's kind of like the Wild West. So we'll see.
The Wild West.
Diamond Sports was facing liquidation after next year. It was widely assumed that Diamond Sports and all these regional sports contracts for these 40 teams would go away. And obviously, a partnership with Amazon would potentially preserve that business. All those 40 local teams are highly dependent on the revenue that comes from these local regional sports contracts. So if Amazon were to come in and preserve an awful lot of the economics that those teams have negotiated for in these contracts, that would be a big deal for the economics of a lot of basketball, baseball, and hockey teams. This is all about what cord cutting has done to the cable.
Yeah, also thinking about Amazon getting potential easy advertising rights, right? Whether it be for Amazon.com on the networks, or whether it be for obviously AWS, getting deeper partnerships there. So, I mean, there's a lot of different angles Amazon could be playing with here. No different than with their Thursday night games. They do Thursday night football. There's a lot of different angles Amazon goes for with that, right? One is getting more people hopefully to sign up for Prime. I don't know how many extra people really sign up for Prime based upon the Thursday night football games, but that's one angle, right? Another angle is the revenue you generate from that. Another angle is, well, you get a lot of viewers watching that game. Then you can advertise your own products and services on there, right? So I could see that there's a lot of different angles there.
Regional sports channels being the most expensive part of the cable bundle has really put these channels in jeopardy. And the question is, what is regional sports going to look like in the streaming era?
Well, I think it also, Tom, and correct me if I'm wrong, sort of heralds maybe the beginning of the end of the old ownership, right? The Disneys of the world, maybe the Comcast, our parent company of the world.
See, and when it comes to Fubo, I like where Fubo's kind of playing here, because Fubo's kind of wants to be everybody's partner. They want to have everything on their network. They're not like, we're only going to have this or only that, versus everybody else is kind of doing like, we're going to have this one thing over here. There's two things over here. You know, Fubo's like, we're going to have college football. We're going to have NFL football. We're going to have NBA. We're going to have MLB. We're going to have hockey. We're going to have it all, right? And so just a very different strategy there that, you know, I kind of appreciate.
And these trillion-dollar corporations, because as successful as Disney and Comcast and a few others may be, Amazon, Apple, Google, they're on a completely different level.
Well, I wouldn't write that obituary too quickly. Remember, this is about what happens to preserve local sports with these leagues. The national packages are still very much alive. The legacy media companies that you mentioned are very interested in, for instance, the NBA package that will be negotiated starting next spring. Amazon's role here may be helpful for that. The NBA has indicated that they may have interest in these national deals having some kind of a hybrid nature to them in terms of the streaming era, where they're both national games and they're aggregating all these local games from the regional sports world and putting them into the streaming package.
Something I saw recently is the SEC lost CBS. Now, you might think the reverse, right? It shouldn't be CBS lost SEC. No, not in my opinion. The ESPN's getting the SEC network now, which if you don't watch sports, you're probably like, what the heck? This sounds like a foreign language to me, whatever you're talking about here, Jeremy. But it's a huge deal for college football. And I think CBS has done a great job over the past 10 to 20 years building up the SEC into this big giant through their great broadcast every single Saturday, during the fall time. And now the Big Ten's getting CBS, and I think that's huge for them. I think the fact that ESPN's now going to cover the SEC, I think that's actually bad. I think that the SEC could actually get less relevant over the next 10 years than it is right now. And I think, if anything, the Big Ten will actually get much more relevant over the next 10 years, believe it or
at a
not.
higher price tier or something like that. I don't think anything will happen here that the leagues are not happy with. I would think, for instance, the NBA on the one hand may say, look, we don't need Diamond Sports in the middle of our future. Their involvement going away would be a clean way for us to reconstitute what a national package looks like in the streaming era going forward. On the other hand, they may say, hey, Amazon coming in here, stabilizing the local regional sports business may be a way to build a foundation of strength around local sport. It allows them to put all the local games together more easily into a national package. So there's a lot in flux here. I doubt these conversations are really at a mature stage. There's so many variables that can play out in bankruptcy court. But the one thing that's clear, as you said, Amazon is going to be a bigger player in TV sports, is going to be a bigger player in TV advertising. It's already indicating it's bringing advertising to Prime Video and all its entertainment programming. So it's going to be a big TV player.
Yeah, Fubo is a big, I think, Fubo could be an acquisition target in 2024. I hope they aren't acquired, but I do think there's going to be a lot of big dogs poking around and trying to see if they want to try to make an aggressive move on Fubo. I'm just looking at it, I'm just like, everybody's going that way, and just Fubo's just sitting there as the streaming, the preferred streamer of people that like sports. That's Fubo. And so it just, man, I don't know. I think somebody's going to try to make a move on them. I hope it doesn't happen, but I have a decent feeling that it might happen. Okay. Appreciate everybody joining me as always. Thanks so much for being here, folks. If you want to check out that 45-minute video I recorded for you, I can email that over today or tomorrow. Just enter your email and pin comment down there, and we'll send that over. Alrighty, guys. Much love as always, and have a great day.